It's Market Day Report. Hey, it's great to see you here on a Thursday as we get things started. Thursday, wait, that means weekly export sales report from USDA. We'll break that down for you in just a moment. First off, let's go to the corn market in the overnight session. What? We might have found a bottom here. If the overnight is any indication of what could happen today, the July old crop penny 3/4 higher, and D's penny higher at 423.5 after this rough slide here over the past few weeks. Soybeans higher territory overnight, up 2 3/4, 1021.25. Let's touch on soy meal and soy oil. That soy meal contract continues to sell off, and soy oil contracts in the 52-cent range. Wheat market, July, half penny lower, 527 3/4. Hard red, penny lower, 523 1/4. And spring wheat, December, 4 1/4 lower, 642.5. Cotton market in the overnight session, up 2 points, 68.34. All right, let's talk weekly export sales with the president of Midwest Market Solutions, Brian Hoops. Good morning, Brian.
Good morning, Tony. Hope everybody's day is off to a great start. Export sales were pretty decent this morning, above the pace that we need to be on to reach USDA forecast. In fact, corn sales this morning for the old crop category, 29.2 million bushels. That puts our total commitments for this year to about 2.66 billion bushels. Well, in the supply and demand report earlier this month, USDA said our forecast would be 2.65 billion bushels. So we've already exceeded what the USDA said we were going to do, and we still have 10 weeks of the marketing season left. So they're going to need to raise that number again at some point here in the near future. Probably the next supply and demand report, likely to raise that again. We're not going to see that much cancellations, I don't think, over the next 10 weeks. These sales were good. New crop corn, 29.2 million bushels, 12 million bushels for new crop. Old crop beans, 14.8. That's a good number as well, well above what we need to be doing to reach the USDA forecast. We haven't hit it yet, but we only need to be doing about 2.5 million bushels each week. And then our new crop was at 5.7, and wheat came in at 9.4. So these numbers are good on the surface. Really not going to affect our trade today for the most part. You know, we've fallen very sharply since last Friday's highs and reversals. We may just see a little bit of a bounce, a little bit of short covering Thursday and Friday ahead of Monday's reports, but I don't think these markets are going anywhere. We just have too good of growing conditions across most of the Corn Belt. A lot of rain falling this morning in the Western Belt, and rain fell last night in Chicagoland area. So it's we're getting a lot of rain, as I mentioned. Good growing conditions. It's going to keep a lid on any rally attempts for the grains.
Okay, and we have a couple of reports coming out on Monday. How big will those reports be? We're talking, again, quarterly grains and the annual acreage. Could those be market movers?
They usually are. The grains report in the month of June, that's one of the biggest movers of the entire growing season, because there's a lot of uncertainty, a lot of moving pieces in here. Not only do we have quarterly stocks numbers being reported, but we also have updated planting acres. So for wheat, for soybeans, for corn, for cotton, all these numbers are going to be changed and reflected in the USDA. And then the analysts have to scramble and start figuring their balance sheets based off of these new acreage numbers. So trade is expecting a very small increase in corn acres, very small increase in soybean acres. There's going to be a surprise in one of those two, maybe both of them. We've heard a lot of corn on corn being planted, especially in the Western Belt this year, but we've also heard some corn being shifted to soybeans, corn acres to soybeans in Southern Illinois, Indiana, Kentucky, those regions, because of too wet conditions earlier this spring.
Yep, good points. All right, Brian, hang on. We'll come back and we'll pick up this conversation on livestock futures. Market Day Report continues in a moment. Cash cattle will be driving the live cattle market, well, the next few sessions, especially that front month for live cattle. The June contract will expire at the end of the day on Monday. So how did we finish off the session yesterday? Dime lower on the June at 221.50, and the August 77 lower at 208.77. I thought it would be interesting before we go back to Brian Hoops to look at a couple of charts here. That August live cattle contract just gives you an idea of where we've been. And could it tell us where we're going as well? Now, we've really been focused on the June contract for live cattle, but again, as it moves into expiration on Monday, this is the one that will have our attention moving forward. All right, over to the feeder market, and feeders in the session yesterday down 30 at 301.95, in the September down a dime at 302.35. What about hogs? Well, let's go to the hog market. Hogs have been on a good run higher, and we saw it yesterday. July contract half penny higher at half dollar, 112.72, and the August up 17 at 111.12. So let's bring back in Brian Hoops, Midwest Market Solutions. I guess let's start on the live cattle side. That June contract will expire on Monday. Thoughts there?
Yeah, if you look at the June contract, we are way below the current cash markets, and that futures contract needs to converge to the cash markets. So I would anticipate we're going to see some sort of a rally in the June futures, maybe a little bit softer cash trade trying to converge. But I don't know the Packers are going to be able to buy cattle a lot cheaper this week. I have a feeling that their margins are improved enough that they're going to be forced to pay up for the cash markets. And that could be a very wild last several days for June futures before they go off the board on Monday. Exports this morning were pretty decent for beef, right in that area of 14 million tons that we have been seeing. But the pork sales, they were outstanding. In fact, a marketing year high for shipments of almost 40 million tons. Sales were 51 million tons. Those are some very good numbers. And we had a cold storage report out yesterday with beef and freezers down 3% and pork supplies down 1% from a month ago. This afternoon, we have the quarterly hog and pig report. Usually that's not a major market mover by any means, but it does look to be somewhat supportive based off of the estimates compared to a year ago.
Hey, Brian, let's look at the energy markets now, and let's start with WTI, that West Texas Intermediate. It's been a while since we've seen it trading within a dollar range to start the morning.
Yeah, we saw that yesterday, a very quiet type market. And again, this morning, it really needs to consolidate. And we've seen that yesterday, inside type trading session. I wouldn't be surprised to see another one today, as this market has a lot of war premium still in the values. And we're just kind of bleeding some of that away. If you look at the options, that has a lot of volatility priced into them. And there was extreme volatility over the weekend, Sunday night into Monday. Well, that really has gone away, and they're drying up that volatility out of those options. Even with the futures not moving, the option values are shrinking, whether it's puts or calls, because some of the volatility is coming out of this market as we have a ceasefire. We haven't had any flare-ups of any wars between Israel and Iran. They're not fighting for the last couple of days. And so eventually, I think we do take that premium out of it, although from a fundamental standpoint, we've seen some big drawdowns in our Wednesday morning reports the last couple of weeks. That WTI numbers, big weekly drawdowns, much more than what the trade had expected, which may give us a little bit higher support than what we had originally thought.
Yeah, we'll keep an eye on that. We'll see you back here tomorrow. Brian Hoops is with Midwest Market Solutions.